YouTube, it's your boy Coop the Chemist. Today I'm gonna be showing y'all a little basics on market structure for all my beginner traders. For the ones that want to learn how to trade that kind of don't know too much about it. You need to know market structure. You need to know which way the market is going, because that is the side you need to be on. I think it'll help out a lot. Even if you have been trading for a while, you'll get a lot of good stuff out of this video. I basically teach you how to look at the market, and basically I want to teach you how to enter trades, not on this video, but basically so you can have an idea of which way the market is going. That way you can be siding on the right side so you can make money and not lose money. So without further ado, let's get it. I'm gonna go ahead and write it down first and then give y'all some examples, and then I'll show y'all on the actual live markets afterwards. So and this works for every market. The market is either going up, it's either going down, or it's going sideways. So when it's uptrending, we call it an uptrend, or you can call it a bull trend. When you think up, you think bull, you think buyers, you think demand, period. And that is what you're gonna have a series of higher, if I can type, higher highs, and higher lows. Like I said, it's either going up, it's either going down. Call it a downtrend or a bear trend. When you think down, you think bears, you think sellers, you think supply. Let's see. A series of lower highs and lower lows. And I'll show you exactly what they look like in a few. And like I said, you're either going up, down, or you moving sideways, just like in life. If you ain't growing, you dying. Ain't that what they say? Consolidation, and that is sideways movement. You stagnant, and that's when you typically do not want to be in the market. You just want to be, you kind of want to be patient before it breaks that consolidation and continues up or reverses down, or whichever way it's going. You want to just be patient and you want to wait. It's typically your waiting game when you're in consolidation. So that being said, let me show you some examples right here. So an uptrend, you going up. Let's say you got the starting point. It went up, so that's gonna be a low. This is gonna be a low down here. This is gonna be a high once it turns around and makes it turns around again and makes a higher low, just to turn around and make a higher high. So this is an uptrend. This is what it looks like. These are going to be your highs. For people that don't know what a high and a low is, this is going to be a high. This is going to be your highs. Okay, it should stay. This is going to be your lows, so on and so forth. Highs, lows, highs, low. That's on an uptrend. On a downtrend, this is the exact opposite. You start up high. This would be a high. Once it turns around, this would be a low. It pops up to make a lower high, only to go down to make a lower low. Lower high, lower low. That is what a downtrend look like. And a consolidation looks just kind of like sideways movement. It might come up, it might come back down, it might go up, it might go back down, it might inch up just a tad, just to come back down just a tad. But for the most part, it's just moving sideways. It's not too clear on which way it's going, and it's just moving sideways. It's called consolidation. You really don't want to be in the move. Honestly, you want to notate the highest point and the lowest point of the consolidation. Wait for it to break it, and that'll tell you which way it's going. I had to teach y'all what a fake out is, which you'll probably see a lot in the chart too. But a fake out is basically, it fakes you out. It finally breaks the structure, and then it turns around and goes the other way. That's called a fake out. Other than that, you will see a breakout, which actually breaks out and it continues up, or it breaks through down here and it continues down. But all in all, with that said, so let me add this too. So a trend line. So your trend lines are what's going to support your uptrends and downtrends. So a trend line, let's just say a trend line is a diagonal, if I can spell, diagonal support or resistance. A trend line is a diagonal support or resistance. And let me just let me just take it back even further because I know it's a lot of this is the basics. So a support, and I'll go ahead and give y'all examples of all this. I just want y'all to write this down so y'all know. Support, think of a floor. It's basically a floor of what price. It bounces off the floor. It is a floor, a floor, or an area of demand. That is where you start to see buyers come into play. Is at support. Um, resistance. Think of resistance as a roof, and that is an area of excess supply. I'm gonna just say supply, but it's basically excess supply. It's like anything else, man. You got a high demand for some, little supply. It's going up. The price going up. You have more supply than anything. With not a lot of demand, price is going down. Hence the roof. But just think support. Just think support as a floor and resistance as a roof for now. And I'll give you some examples of that other. And then a trend line is a diagonal support or resistance. So your trend line, so on this uptrend, your trend line will be right here. It is a diagonal support. Makes sense? It is supporting this trend line up. Every time it hits it for a higher low, it is making a higher high. On the bear side, it is a diagonal resistance. For the most part, this one a little sloppy, but no chart is perfect, and you'll see the market do this all the time too. That would be like a little small fake out, but for the most part, it comes back into the trend line to make a lower low, and it stays into the trend line. So as long as it's in this trend line, it is a bear market. It is a bear trend, and this is what a bear trend line look like. You put it on the top. You put it on the resistance side. Bull, you put it on the support side. Area of demand, like I said, it is pushing price up. You think bull, you think buyers. Down, you think bear, you think sellers. Until, actually, let me go ahead and do this too, because I'm gonna show y'all in the markets, but it's actually easier to show y'all right now too. So if you want to write that down too, I'm gonna take it off real quick, just to notate a reversal. So a reversal is when I'm gonna put this on here too. A reversal is when basically when the trend reverses. It's simple enough. When the trend reverses to either so you can have an uptrend reverse into a bull, you can have a bull trend reverse into a bear trend. You can have a downtrend reverse into a bull trend. And I brung this up to say, so on an uptrend, once you to confirm your reversal is basically once you crack this trend line. So what happens once you crack it and it breaks through it, you get a nice candle that closes below it. It usually retests it, and then it continues down, and it turns into a reversal or a downtrend. And that's where you get your downtrend line, your bear trend line, aka your resistance trend line, or your area of supply. Every time it hit it, it's excess supply and it's downtrending. Makes sense? And this can go the exact opposite if I was to bring this back. And you'll see this. I'm finna show you live. I just want y'all to get the gist of it right here on the drawings, because it's easier to see for the untrained eye, I would say. But yeah, make sure you got all this down. Let's kind of go up here with this. Yeah, all this down. Just put all this down, and I'll show y'all support and resistance, not necessarily in a diagonal form either, but in the horizontal form too, because that's key too, as far as entries and exits. But yeah, so this will be a bear trend reversed into a bull trend once the trend line get cracked. I just want to make sure y'all understand that before I dive into the markets. So without further ado, I don't want to make this video too long, so I chose US30 because it got both. It's one of my favorite markets. It got a lot of ups, it got a lot of downs. There's not a lot of consolidation. And I'll show y'all what the consolidations look like too. Actually, you got something right here. I'll start with the consolidation. So basically, you see how the market is moving sideways. Like I said, you want to typically notate the highs and lows of the consolidation. I usually draw a box around it, so you can see the market is neither uptrending nor downtrending. It's like a baby downtrend. If you notate these highs, you start to see It wants to continue down just a little bit, but for the most part, it's just consolidating. It's neither moving up or down. So if you're in a position over here, a buy position or a sell position, you might make a little money, but for the most part, you're gonna end up holding. Depending on how many pips you're trying to get, you're gonna end up holding, waiting for your move, and you're gonna be holding for a while because it's just moving sideways. Like I said, you do not want to be in the market during consolidation. Once you do notate the highs and lows of it, that's how you play. Once you get the break of these highs and lows, hence the top and bottom of this box. This is what you see when I told you earlier, a fake out, where you have a close below it just to come back in. Normally you want to play on a breakout, you want to play on a retest, meaning if it breaks this box, it's going to come back and retest it and use this old support where it used to bounce off of it and use it as a resistance and continue downside. So typically you want to see this on a breakout, let's just say from this high to this low. You want to see a retest and you want to see a move continue downward. This one you do not get that. It's a fake out. You get some playing field, some bulls back inside this box, come back down the wick off of it just to continue up. And if I actually drag this box over, you see the move where it really wants to go was up. And that's why it's important to notate on the higher time frames. I'm on the 4 hour, but if you look on the higher time frames, let's just look at what they look like on the higher time frame. It's still bull. It is still bull. So let me just break down the bull market right after the consolidation. So you got a low, you got a high, you got a low, you got a high, you got a lower high. I'm sorry, you got a higher low. Notice these are higher lows and higher highs. So you got a low, you got a high, you got a higher low, you got a higher high, you got a higher low. You don't necessarily get a higher high right here. What you get is a double top. So you get a lower low. So it's actually like it's actually lower than this high. So you get a small term bear trend just to turn into a long term still bullish. That's why I say you have to notate the higher time frames. But all in all, this is a bull market. This is what you get. The trend line to support it, you'll see. You can put it right there, or you can even put it right here. I kind of like it right here on the daily because you can actually see where it actually reverses. You see where it actually reverses right here. So whole time this is an uptrend. Like I said, referring back to what I drew, higher highs, higher lows. And once it does crack it, it actually supports it one more time, but it fails to make a higher high and it cracks it. And once it does crack it, it kind of retests it. And mind you, it's never going to be as crisp as my drawing is. It's always going to be a zone, especially on the higher time frames. So you always want to dive into the lower time frames to really see what's going on. So let's do that. Let's go back to the 4 hour. Let's go back to the 4 hour. I'll delete that. And I delete that. So that's consolidation, and there you have your uptrend right here. But all in all, let's go to where it turned bearish. I'll go ahead. Well, I'll keep this on there just to let y'all see where exactly it's kind of retesting and everything. So once you see this right here, so you notice, okay, you got high, you got low. It's still making higher highs and higher lows, right? At what point do it turn around? It turn around right here. It fails to make it's kind of make another double top, an M pattern barely. When you get this flush down right here, then you thinking bear. This is a long this is a 4 hour candle, and it basically undid, I want to say like maybe 20, 30, maybe 30 candles right here. So that is a lot of bear pressure that the bears are putting on price. So once you see this, you want to think bear, and hence the lower high right here. This market turns into a bear market. This market turns into a bear market. Lower lows and lower highs. And even if you had your trend line, even if you had your smaller trend line, let's say from here to here, you still see what's going on. I kind of like this one right here though. Off this old high, and put it right there. Because this the one that's riding up. It's a nice size degrees, and typically that's how you want to do it. You don't want it too steep. The steep ones always get cracked. Notice that. So if I did go right here, you see that one got cracked a long time ago, but it came back in, start playing in it, but didn't stay in it for too long before it flushed down. Once you see this move right here, so let's just go back into real time. I don't want to have this video too long, but I really want to show y'all market structure and how to look at these markets. So if I'm in real time, right, like I said, I like this one a little better. Let's just go from this low right here. You see this little correction before it continue bull, and you see these lows right here. Let's just drag it over. I know I kind of got where the market's at, but let's just see. So once you get that flush right there, you immediately thinking, oh shit, my shit just got cracked. Let's see what it do. Let's have a reaction. You don't sell off rip. I mean, you can for a little pip or a little move down, which actually is a lot because US 30 actually moves. But I mean, it just depends on what you're trading and your lot size. Excuse me. But main thing I want to show you is the once it does crack it, it retests it. So at this point, you see the retest. You looking for, and I'll show you the field in another video, but I would throw the field on here. But basically, you're looking for a retest to make sure and confirm that this is a bear market. You want to make sure it cracks it, one, and that it comes back and retests it and then continues lower. You might not wait for the whole move lower. All I need to see is a signal to where, hey, okay, this is bear pressure. So once it pops back up, you see this bull momentum is followed by damn near the same candle body size, but it's a bear candle. So it's letting you know, hey, that is a good entry for a lower low. And I'm probably going to enter off this wick somewhere, and I'm a TP, probably the first TP right here at this low, but ultimately at a lower low down here at this old supports for another TP. But as you can see, that's what's happening. So let me just play this thing out. I'm going to just play this thing out to show y'all, and I'm going to stop it, and I'm going to stop it every time I'm going to throw a trend line on there. Every time I'm going to throw a trend line. So I see another lower low. So peep the highs, peep the lower highs and lower lows on this bear market. It is turning bear. Peep that. You see that? Lower highs and lower low. I immediately throw my trend line. See, look, this is the thing. You can throw your trend line from this top to this low, right? I usually like going from the first two, but you can obviously see how steep it is. It's going to get cracked. If you're looking to sell, you don't looking to sell off the steep ass trend line. You can obviously see this one right here is a little overshot. So you can either start it right here and play it like this, or maybe off this one. But I typically just go off the very next high. Like I said, this one is a little overshot, and I will put it on the first two. And like I said, if it's a true bear market, you want to throw it on the first two, and then you want to shoot for that lower low. You want to shoot for that lower low, meaning, so you got a high, you got a low, you got a lower high, you got a lower low. Like I said, depending on how strong the market is, you typically going to get 1, 2, 3 bounces off your trend line. The first one is kind of, the first two are kind of the confirmation of the trend line, but the third one is a good one to play off of, just a little advice. So let's play it and let's see what happens. Leave these trend lines up here for see where your retest. So once you start to see it, pause it. Once you start to see it, you see the rejection come up there as soon as it touches it. Once you start to see it come back up here, you might have an alert. That's when you want to be watching it. That's when you want to start diving into the hour, into the 4 hour. See if you notice any patterns. Wait for confirmation. This one right here is enough confirmation for me, actually, because obviously you see this is a straight bearish engulfing. It basically undid the last 4 candles. But I don't want to dive too much. I just want to cover the basics. I don't want to confuse y'all too much. But just letting y'all know, this is a bear trend. This is a bear trend. You see this right here? This is called this engulfing candle. It is engulfing basically this whole consolidation, and you can see the pattern is called a double top. So basically you get the gist. You get the lower highs, lower lows. You get this lower low right here, followed by a lower high, and you get this double top or an M pattern. And it should continue low. Let's just play it out. You get the lower low. So honestly, I would probably enter up here, and I'm banking on the lower low. Let's see if it hit it. If it don't, I mean, you can always TP at the olds, but this time you never got it. You still see it's playing up this trend line. Oh, it jumped back up. So see if it want to stay bull. We will see. But notate these highs up here too at the same time. You want to notate these highs up here too. If you don't already got it. If this thing gonna stay bull, it's gonna take away these highs, and it's gonna come up above them. Both of them actually, but one at a time. You want to look one at a time, and then you want to draw your bull trend line. Actually, I'll go ahead and do that. You got a long-term bull trend line, but let's see this one, because this one actually made a high. This is the low. It made a high. It made a lower high, and then it made a higher. It made a higher high right here. So let's draw this right here. Let's see what we get. You can go right here. You can go. I kind of like this one right here because you can see the fake outs and everything. So let's just see if this thing gonna continue bullish. No, it doesn't. It gets cracked. It gets cracked. That lets you know it didn't even undo this old high up here. It did undo this one, but it didn't last too long. The bulls were not able to push price that far up. So you see it actually turned around, lower high. So therefore, take this trend line off. It is no longer bull. It is still riding underneath your daily bull trend line. Like I said, on a reversal, it usually cracks it, retest it, and that's what you have here. And as far as this trend line right here, keep it on. Keep it on, because, like I said, this is the start of your bear market. This is the start of your bear market. Just keep it. You see what's going on, especially when you see price start to react to it. You see it start to respect it. But all in all, it is still bearish. All in all, it is still bearish. So I'm gonna do this right here. I'm gonna show y'all something. So from this high right here, you can go back to this one right here, because it's a better slope. Makes sense? It is a little better slope on there. It's a little better slope on there. You know what I'm saying? It's not as steep. It's not as steep as boom boom. So it's still a bear market, even though it came up and started playing in this channel. You can still see it still wants to continue down. Hence this lower low right here. I don't want to make this video too long. I want to just, let me speed it up just a tad. I just want to let y'all see what's actually going on. So it's still bear. You still see lower highs, lower lows. You start to get this double bottom. Once you see this double bottom, once you see the crack of both of your trend lines, oh man, this is bull right here. This is bull market. You know what I'm saying? You get the double bottom down here, and I'll break down support and resistance too. But I want to show y'all as far as how these cracks work and how reversals work. But you see the double bottom. It's an M pattern, a W pattern. US 30 is known for reversals off of a double top or a double bottom and trend line cracks. So you see the bulls, they really start to come in, and then you see a retest off your old trend line, a fat one, and then I'm telling you, it's time to start entering. You start to see straight bulls. Not up here. Not up here though. So once you start to see your higher highs and higher lows, as far as if you swing trading, go ahead and throw your new bull trend line on it. I'll probably take these off. This has been long gone. I keep that on there because that's probably a slowdown point. Let's just see what happened though. So probably off the next bounce, you can get in for a higher high, and that's what you got right here. That's what you got right here. You see this, a lot of bear momentum. It's a lot of shit to undo. When I start to see engulfings this big, I usually think, oh, it might push down just a little bit lower, but it didn't. It didn't. The bulls came right up, and like I said, it's gonna take a while for them to come and undo this fat bear momentum candle. But that's when you start to dive into the smaller time frames, and you see what's really going on. And it really, I had to teach you how to look at it with this fib. You throw the fib on there, the fib will teach you a lot about if it's really gonna continue down or if it's really gonna continue up. And subscribe, because that's gonna be a later video. That video is key. You can scalp off the fib. You can make a lot of money off that Fibonacci, man. But for the most part, I just want to show y'all market structure. In fact, let me go back to the 4 hour. You see, you finally eventually got the higher high. So this is a bull trend. It's a bull trend in a sense, in every sense. I'm saying, you got the crack, you got the retest, and then you start to get the higher highs and higher lows, just as I drew it up. Let's just keep it going. Let's just keep it going. Let's just keep it going. Price. Look, this is the thing. When price keep rising. You see this? You see how it starts sloping? You see this is the normal slope you got. Once you see it start to super slope, you know what I'm saying? You can premeditate this. Put your highs right here. Put you one up here. You can premeditate this for a small term break for bears. Like I like seeing that shit because I'll be almost waiting for that bitch to crack. The steep ones be cracking. Once it crack, you can play off that crack. And there go your crack right there. And let's see if you get a retest. You get a little retest. And you get a crack on the other one too. So, I mean, you could have jumped the gun right here on this retest for a sale. But once it cracked this one, you pretty much know that this is a reversal. It's turning into a bear market. But you still want to undo this low. But all in all, you did undo this low. So, I mean, it's safe to say this is a bear market now. And here comes your retest. There go your retest right there. You get the double top at the bottom, or the M. I mean at the top, and you get the M, and you get a flush down. And I'm telling you, man, it's key. once you start to see that, once you see that, let me try to bring this down a little bit. Once you do see that, time to throw your other trend line on there. I usually like going at the highest point, like I said, the first two, because you want to play off that third one. In this case, you really don't get the third one. That's why it's always good to be patient. You really don't get the third one. What you do is you get a fake out. You get a fake out. They want to retest his old support break one more time before it flush back through, and then you get some more bull pressure to make a lower high, and that basically confirms your double top. I guarantee you, if I bring the RSI, you're gonna see probably a divergence right here, letting you know that this thing is steady going down. I had to bring up the RSI and divergence in another video, but you can YouTube. I'm pretty sure there's plenty on there. I'll show you exactly how I play it and how it makes me plenty money. But yeah, you see it's right underneath that trend line. You see that? Lower low. Peep this lower low. Once you peep this lower low, you like, okay, they ain't got no chance. So you see this lower low. Once it start getting back up here, you basically wait. You basically knowing it's not gonna break this high. It barely even broke this high. I don't think it did. It didn't even break this high over here. You start to see these lower highs, lower low. So you looking for another lower high so you can play it all the way down to the lower low. This trend line right now, I like it right here because it's showing you all these fake outs that it's doing. You can raise it up if you want to about right here. Keep it at the same slope, but when you see the fake outs, just kind of raise it up above everything, and you can still play it off that too if you want to. You can clone it and put two of them on there. But yeah, man, you see what's going on. Straight bear pressure, everything bearish. I think you finally get a turnaround right here, and I'll show you. Okay. So like I said, the steep slopes always get broken. Them good ones to play off of too. So you got the high and you got the other highs. So you see how steep this is? They gonna get cracked. They always gonna get cracked. Let's put it right here actually. Let's put it right there. So you start to get a turnaround right here at the bottom of this. And if I actually dive into the hour, you actually see this head and shoulders pattern even better. You can call it a W, but it's more so a head and shoulders. Head and shoulders is, so you basically got boom, one shoulder, a pop up. You got the head, another little pop up, and then you have another shoulder right here before it eventually cracks this trend line. I'll show y'all a little bit. So basically that'll be the shoulders right there. They're about even. And the head right here, it's never just super crisp, but all in all, that is a reversal pattern. Especially once it cracks this trend line and it retests it, as you can see, all this bull momentum. And let's see what it does. Actually, right here, this would be a good time to demonstrate horizontal supports and resistance. Let me dive into the hour. So basically, support and resistance. Like I said, a support is a floor, a resistance is a roof. So think of this as your support, and it's always a zone too. Think of this little zone right here as your support zone, right? Every time it hits it, it's an area of support or area of demand. That's when the bulls start to come in play. And once it hit it this last time, it made a higher high. That should let you know right now. What you're looking for is a higher low to see if it want to crack this trend line. And once it did, it cracked it, rolled it down for a higher low up here, and made even a higher high. So you can say right here is an area of resistance, because every time it came up, it got rejected. It's a roof. Make sense? Make sense? Yes, sir. So basically, on an uptrend, a resistance gets broken and it basically breaks out. We call it a breakout, and it retested and use it as a support. Right here, you barely get a little bit of that, but not so much. You can't really see it too much, but up here you can. Up here you can. So you see it got rejected once, twice up here, but once it did come back down and break it, it used it as a support to make new highs. Same up, and then actually came back and showed some more love on it right here. Just barely. And even in these little small pockets, you can see old resistance turning. And in US 30 do this, and they do it so smooth. That's why I like US 30. The currencies do too, but it's never as smooth as US30 is. So let's just see it. Let's just see it. It's the hour, by the way, and it actually ended up going back, showing love to this old support before it ended up making a new high. It's taking off on me before I can see it. Let me get that out the way. Hold up. Let me get all these out your way. But basically, you get the gist of support and resistance. You can say another resistance right here where price was getting rejected. Basically, when you see wicks at the top, you see rejections, and you start to see bears follow. It's basically areas of supply or roofs or resistance. It's letting you know that price is going down. In resistance spots, you want to look for sales, but you always want to make sure you back it up with other stuff. And let's just see. Let me just do this real quick because this is key right here. This is key right here. So my very first trend line I had, let me drag it out and you will see what's really going on. I'm dragging it out right here specifically because I got it 1, 2. Like I said, I got it boom, boom. I like to keep mine like that. I like to see the fake outs. I like to see everybody got them anticipating shit and losing money because I like, damn, I'm glad I didn't do that. You know what I'm saying? But all in all, this is another support or another resistance turned into support, and you can see it slowed down right here at this long-term trend line, on this long-term bear trend line, like it wanted to continue down and make a lower low, but the bulls had other plans. You can see the indecision right here with these long wicks on both sides of these dojis, and then but you see it finally made up its mind once you see this bull momentum candle right here. This candle right here is a momentum candle. It's very little wick. It really has no wick at the top. So it's just letting you know the bulls came, and like I said, indecision at first, but the market finally made its mind up. The bulls is the ones that's gonna take over, and they're the ones that want to push price to higher highs, and that's what you got, a higher high. And you could have bought right here at this resistance. You can say old resistance, new support, there's the retest, or you can say, which is the same shit as this old resistance trend line, which was a bear market, a downtrend trend line got retested in a way to make a higher high. Speed it up, see what's going down, and there you see the higher high, and it's a straight bull action. You know what I'm saying? That's straight bull action. You can draw your trend line right here, and hopefully you gained a lot from it. Y'all got the ability to pause, go back, rewind, you know, press play, press pause, and really understand and notate that. So I gave you what I gave you: market structure. I gave you uptrend. I gave you downtrend. I gave you consolidation. You need to be knowing which way the market is going, because that's who you need to be siding with. I actually teach y'all how to trade them and how I enter positions off these trends in another video, because that'll be a whole nother video. I ain't want to I feel like this one is already too long, but all in all, you get the gist. Support and resistance as well, and trend lines to back up your trends. If you actually gain something from this video, man, I appreciate you like and subscribe. You know, leave any comments you got, any questions down below. I take all feedback. This is only the basics, so stick with me. We're gonna be uploading videos. I'm probably go once a week, twice a week. But all in all, man, it's CTC Markets, brand new YouTube channel. Show some love. I appreciate y'all.